Excellent. Thank you very much for having me on, Terry. Very excited.
Because I know you've had obviously you're quite remote, and therefore had to make an effort actually, almost knowing that you didn't have proper internet, but you drove quite a while away just to come here to make sure that you could come on tonight.
Yeah, no, it was very exciting. Gave me an excuse to get to the big smoke and get some decent internet service.
Awesome. Yeah. So John, I'd love to know, where are you from and what do you actually do for a living?
Yeah, I grew up in central Queensland from a cattle raising family and live on a cattle property in sort of North Queensland that my grandparents owned, and I managed that. Been there for 17 odd years now, and so just been on the land basically my whole life. And my wife owns a vet surgery in central Queensland in Claremont, so we sort of go between the vet surgery and the cattle property, trying to run both as best we can.
Yeah, cool. And I believe you're in a country town called Claremont, is that right?
Yes, that's correct. It's it's pretty much central Queensland. Inland from Rockhampton, south of Townsville, in the middle of nowhere, in a coal mining town. We do have a coffee shop, but just the one.
Just the one. Okay, so therefore you got no choice. They've got a monopoly, literally.
Yeah. So, definitely have a monopoly.
Yeah. So I thought Alipay was powerful, but I think that coffee shop's got even more power.
Yeah, definitely, especially for the early morning starts for all the miners.
So John, going back in time, what's been your relationship with finance and investing when you were growing up?
Nothing really. My parents, a bit of an old-fashioned family. We don't talk about money and didn't talk about it. I grew up very well. We always had everything we ever wanted, but just never really had there was never any talk about money. It was definitely never anything on the side of investing or buying off farm investments. It was always any money you get, put it in the bank, and the return on the interest was all you needed, sort of thing.
Right. And do you think that was a particular reason why your parents never spoke about money?
No, I just think it was their upbringing as well. You never spoke about it. You didn't. The groups their friends and that never spoke about money, and it was just. I think it is just a general country thing. You don't talk about your money to your mates. It's sort of in case you are doing well, you don't talk about it, and then I suppose you don't talk about it, they don't talk about it, and so no one really learns anything.
Okay.
They'll just talk horses and cattle.
Right.
That's about it.
Right. I mean, then because you never spoke about it, were you actually ever interested in investing in trading anyway?
Going through school I always was, because obviously teachers and that spoke about it. I went to a boarding school in Charters Towers, and teachers spoke about it, and I thought that'd be something to, interesting to get into, and then obviously go home and tell the parents about it, and they'd say it's not safe, it's too risky to put your money in the share market, and the whole fear thing. But I was always interested in it. I love numbers. I love working numbers and that sort of thing. So it always interested me. But
Okay, and then what ended up getting you into this investment game initially? What piqued that interest?
I guess back in, I think it was 2008, when the markets were going hot and crazy, and if you weren't in it, you were losing. So I was one of those people that threw all my money in the market in 2008 and watched it disappear in 2009. So
okay, so that was your first experience. Okay,
that was my first experience. It was a good learning one.
Yeah.
So now I think I lost a third of my money I invested within 12 months. Went well for the first 9, and then I think disappeared not long after that. I went through a financial advisor, and obviously just didn't have the right mental thing, psychology behind it, and not having grown up with it, and and then promptly took my money out and with my tail between my legs. So at the loss of a third of my portfolio.
And then before, I guess, Blueprint, what's obviously that was partly part of your experience. But what were the main frustrations that when you went through that whole period? What was the frustration that you saw out of that?
Just not knowing, because I knew there were people out there that made money out of it somehow, and just not knowing, and I just wanted to find a way to find out about it. So because I put my money I gave my money to a financial advisor through the bank, and I thought, well, next time I do it, I want to do it myself, and I want to learn how to do it, and not trust my money with someone else, but just have a go myself. And I thought, surely if there's other people making money out of it, then there's a way that I could work it out as well. Not the sharpest tool in the shed, but crack.
I mean, in the end, we got to learn from somewhere, and I think it's you know, a lot of people, they think you need to have that experience, as in, you know, what you just said, not the sharp. You may not be the sharpest only because you haven't done it, so you're obviously sharp in many other areas. But then, you know, once you're exposed to it and you learn more and more, then that's how you know, you get better and better over time of pretty much anything. I believe, including finance itself.
Yeah, definitely, and yeah, the more you, like that saying, the more you surround yourself with it, the more you learn. And when you're starting from zero base like I was, it was just mind blowing when I finally got started in the blueprint. And
yeah. So by the way, actually, what led you here? Like, as in what? Yeah, led you into blueprint and me. In other words.
Yeah, well, it was that fellow that commented on the screen for Sam Bowden. My wife, she's a vet, goes through one of a business course that he's part of, and and I was down at one of these courses with Tess. We were learning about money, and he just mentioned one of his goals was to become a share trading master. And I've been thinking about it for 12 months, you know, listening to podcasts and doing all of that stuff, learning as much as I could. And I thought, oh, well, Sam wants to become a share trading master. You might know someone who could teach me who's taught him. And that led me straight to you. That's how I ended up here.
Yep. Okay. I mean, how long? How long actually have you been with us now, roughly?
I think it's about 18 months. I think it was around June, July last year. Yeah, joined up, and it's about 18 months. Big learning curve and a great one.
Yeah. And what's been your experience so far then?
Yeah, mind blowing. When I started, I'd heard them talking about these things called tickers on podcasts and that, and I didn't even know what that was. So so obviously everything I learned, I was learning everything. The only thing I knew was whatever ABC News spoke about on the finance section at night. That was about it. It's just been from where it starts, the psychology side of it. The very first one you go into, and that, you know, instantly when I did that one, I realised that's where it all fell down for me. Apart from trusting my money with someone else and expecting someone else to do the hard work for me, it's all based around the psychology. And so just starting off on that, it was when I did that first module, I was in the right track. So everything after.
Yeah, I was going to say we've actually got quite a lot of newbies on the line as well. So, you know, when you started, you know, what was your experience as well? Because being totally new to this whole game as well. So, what was your feeling? Of course, potentially overwhelmed, or So, I want to hear it from your mouth.
Yeah, it was definitely overwhelmed and just not really knowing where to start or how to answer the questions, because the questions are in there. Well, what's your investing goal? And because I didn't know anyone that ever spoke, I didn't really have a goal. It's just to make money somehow, and I suppose I thought a 7% return a year was good, and that's also sort of led me here. I looked at other courses that, you know, promised you a double return on your money in a year, and I just knew that wasn't realistic. And yours was basically saying if you do the hard work, you can get your 10%, and if you do really well, you can get 20%. Never promised the world, but it was for me starting out, it was just getting that psychology behind it, and then the learning and the overwhelm, just all this information that I'd never even heard of before coming in and trying to absorb it. And just looking back through the goals that I set, you could tell I didn't know what I was setting, because they're totally different now to what they were 12, 18 months ago.
Yep. So you're saying that now that you've looked back at it, at the goals that you set before, you're actually now revising them. Would that be right?
Yeah, definitely. I think my goals at the start were just to make a trade, have a win, and see where it goes, and hopefully get a return better than what the banks are offering in a term deposit.
Yeah. Okay. Now it's actually good to see that it's expanded your mind in terms of what's possible.
Oh, absolutely. Yeah. And just just opens other your eyes to a totally different new world, and and it gives me a more of an eye towards the future. It's just not sitting the money sitting in the bank. And the other reason I got into it is I got 2 kids, and I'm sitting outside because of the witching hour at the moment, and I'm wondering why I did it for them. My wife battles trying to get them to bed, but yeah, I want them to grow up knowing that an average person living in a country town in the middle of nowhere, you need half decent internet service, but they can grow up and they can start investing in the likes of MasterCard and anything like that, and all those big companies that we can actually own a part of. Before this, I didn't actually know that you could really do that. So.
Yeah. Actually, this might be a good segue into just sharing. And thank you for that, because I know you sent me the email with your spreadsheet. So actually, I wouldn't mind sharing with the I guess all the people on online at the moment. What's when you talk about your what's possible and what the returns you've received so far. So if that's okay with you, John, I'm going to just put that spreadsheet on the line at the moment.
Yeah, that'd be great. Thanks, Jerry.
No problems. So this is John's spreadsheet. So what I have done, though, just for privacy reasons, I have covered all the dollar figures from John's side. So I'm just focusing on purely, so no matter what size your account, this is just purely looking at the ROI. So these are the completed trades that John's done. And like you said, it doesn't have to be massive investments, massive trades, or a lot of trades. It's just, beginning and starting the journey. And so far out of that, there was 26 investments out, sold out, and they were the returns. So out of that, 25 of them were wins, sitting at 96%, win rate, which is actually very, very high. Then when you look at the average return across the board, the one loss was on the Galid Science, and that was -8%. But then across the board, it's just a lot of consistency. Didn't shoot the lights out pretty much anything except for one of them on Apple at 37, and the rest was just single digits to sort of double digits here and there, averaging 6.5%. Annualized, of course, 99, but we won't look at that because he holds them roughly about 43, just over a month and a half per each trade. But when I look at the expectancy, and this is the important one, what expectancy is, for those who you can type in, I do believe I've got a video on expectancy and the system number. So there is a video inside Inner Circle and Blueprint that actually discusses that. But what expectancy is if you look at John's, in terms of his average return on profitable trades, and then take that percentage, which is 96% on the win rate, and then you deduct the negative expectancy. So there's positive expectancy, which is the win rate times the average return on all the profitable investments. And then when you take away the negative expectancy, which is the percentage of his losses, which is just over if he's won 96% of the time, 96.15, then his loss rate, because he's only had one, it's quite easy to calculate. It's 3.85. Therefore, the negative expectancy is roughly about 4% negative times the average loss, which is at -8%. And when you take that into account, then his expectancy is 6.51. What does that mean? So if John keeps this up, what it means is every single dollar that John puts into the market, he's expecting in 43 days to roughly get a 6.5% return. And of course, does it happen that way every single time? Of course, markets come in waves. It doesn't happen every month. If not, everybody's going to be extremely rich and wealthy. It does happen, of course, as we see. It comes in waves, then it goes away. You might not have anything in for about 2 or 3 weeks, a month. Then it comes again. But what he's doing is, based on his record so far, he can comfortably say that every $100 he puts in, literally 43 days or 45 days later, roughly, a month and a half, $6.50 or $6.50 will come back as a return, which is actually very, very high. And therefore, you've got that comfort in a way where knowing rather than sort of hoping, I wonder what return I'm going to get. And I mean, this is only on 26 trades. Obviously, the more trades, the better the calculation will be in terms of showing that. And John, down a track, it'd be good for yourself just to keep this running as a running total. So and this is for everybody. For everybody, who's got this, your completed trades, it's really cool to calculate this even on a quarterly basis, just to see where your expectancy, has it dropped, has it increased, is it staying stable, and if it's decreased, are you now is the market changing, Or potentially, are you therefore making silly mistakes potentially by either going FOMO, investing in things or trading in things you shouldn't be trading? Therefore, over the last quarter, everything's just dropped down because you're taking on board risks you should not take due to lack of patience. Or on the other hand, if the expectancy is going up, then you ask yourself, what am I now doing right compared to even the last quarter? And can I now replicate that, going forward to other quarters? And the more you do this, the better you become as an investor, trader, because you know your rate of return. Because when people, say, they talk about their returns, it's just one figure. What does return actually mean? What is more important is, what I call the risk adjusted return. How much risk are you taking? And just from looking at, I have actually looked at John's trades. He has hardly taken really on board any risk. But to make that return, I would say it's not risk free. Nothing is risk free. But to take on board the risk he's taken, it's very, very low. To get that is actually a very good record. So, John, does that make sense, by the way, that I've just gone through?
Yes, absolutely. And a lot of that is because I have a very low risk tolerance. I don't like taking risk. And I literally have only invested and I take on, while I'm investing, I only take on one trade at a time, anything with the trade stock, so anything that's not undervalued. And that's why I haven't bought many stocks, and probably 3 or 4 of them I actually bought on FOMO because I hadn't bought anything for a while. And I thought, geez, I better buy something, otherwise I'll forget how to use interactive brokers. And they're probably some of the ones that I'm still waiting on. So it's definitely don't invest as much as I could. But
Yeah. So what it means, John, in a way, because you're so risk adverse, as you get more and more comfortable and you do more and more trades, let's say by the time you get to say 50, you're on 20 odd. Let's say you go on to 50, you've doubled your amount, and you're still getting the same thing. What that could mean is, in actual fact, the way you're investing or trading, because of the risk adverse nature of yourself, it's a good thing, because I don't want to change that, because everybody's personality is different. So what that may mean is that as you get comfortable, then if you pile on, I guess, the account size, but you're still sticking with the same super risk adverse rules, it just means that this is just going to replicate, but on a bigger scale. So to basically make more money dollar terms, it just means that you do the same thing, but then now, rather than having, say, example, a $25,000 account, then you go to 50, and have you doubled the risk? No, you haven't. You actually have literally stabilized. The risk is the same, but all it is now is that you're still extremely risk adverse, probably more risk adverse than people like myself and many other blueprinters and inner circlers on the line. But then yet the returns that you're getting is far more stable and far more risk adverse. So you're going to hardly get any losses, so to speak.
Yes, and that's sort of what I was trying to start out doing for the first couple of years, because just starting out, I wanted to, because I like winning, and I didn't want any losses to come my way, so I did pretty much stick to anything that was undervalued, and I'd buy that. And then go off that, and then just having that one trade to keep dabbling in it, and long-term goal is to get more comfortable and with my trading and following the rules, and raise my risk profile, risk to reward, and all that. But I'm very happy with where it's at the moment. Farm. I was going to say, sorry, the farm has a term deposit at the moment with a lot of money in my account's only a very small one, and I've made more money with my very small account than what that term deposit has made in the last 6 months.
Yeah, definitely. Funny enough, John, I was speaking to about 60 farmers last night on the line, live, and a bunch of them couldn't make it because of timing, but they're going to watch the replay. And I was comparing, I literally did a little research project on myself, because I know a lot of farmers have the farm deposits that they've got their money tied up in either land equity or in their farm deposits, sitting there in cash. And 3 years ago, when I spoke to, the first time I spoke to farmers and I did research on the rates that you guys were getting, of course, different environment, far higher returns. And that's, across the board nowadays, not just farmers, but, everybody else with term deposits. But then when I looked at it, I believe the big 4 banks were paying literally between 0.3 to locked in for 12 months, 0.6% NAB. And then if you go into the community credit unions, say the likes of Heritage, they were paying up to 1.9 for the entire year. So it's obviously, but then you're taking more risk because these banks could, no, touch wood, it shouldn't close, but anytime they don't have as much security than say a big four bank, hence why they can pay much more higher interest rates. But you're getting literally 0.6 to 1.9, which doesn't even basically cover inflationary rates, which is quite incredible because you're going backwards as time progresses as well.
Yeah, absolutely. That's how I look at it too. Yeah.
Yeah. So so it's good. What you're doing now. Obviously, it's opened up your world in terms of what's possible, which is good to see in the end.
Thank you very much, Terry. And of course, the program you run from start to finish, it's just giving me that confidence to start from the zero base and make that first trade. And I know even with one loss, it's no big deal. You just go and wait for the next bus to come around, and yeah.
Yeah, I mean, your one loss, in the scheme of things, it's really covered by a couple of, small trades anyway, even one particular trade, and then the rest has just been, you've been on a run, which is actually good, really, really good. So so thanks, John, for sharing this. This is awesome. I'm just going to stop the share of that. So hopefully that everybody got to see John's portfolio on that Excel spreadsheet, and please take in mind what I spoke about on a quarterly basis. If you can, just calculate your expectancy and just see how you're going along the way, because what gets measured gets improved, and if you don't know what's going on, then you will never know whether you're declining or are you sort of at least being stable or moving forward. So very, very important. So if you don't find the video, let me know, and one day we could do another. I can do another session on calculating, say, positive and negative expectancy if we require that. So back to I guess the questions, John. So throughout this journey so far, I've seen, of course, the figures. What's been your biggest aha moment throughout this your little journey so far?
It was probably the very first module, like I said before, the psychology. It just pointed back to so many things in my past that, that get your psychology right, and you can pretty much have a lot of wins in this. And that was probably one of the biggest ones. There really is so many when you're starting from zero base. There's just so many every time. There's one in every inner circle meeting. I go, oh, yeah, there you go. Especially when I ask my questions that I usually ask. Usually a moment, thinking, silly, how could you ask that question myself? But so probably that was the biggest one. Starting the psychology was.
Yeah. And how much time? I mean, I know you're very busy, of course, on the farm, but also with your wife's the veterinary service as well. So how much time do you actually spend, doing this on a daily basis or even weekly basis? Do you reckon?
Usually just about an hour a day. Depends what's going on in the markets. Of course, there's more to stocks to look at, to look into, to value, and that sort of thing. I spend a couple of hours, and then I try to every Sunday I sit down and watch back an old inner circle meeting that I didn't make or something like that if I can. And so that takes up an hour and a half. But actually looking into my what the market's doing that day, an hour a day at the most, so 7-8 hours a week. And usually at night we turn off the TV and I'll look at what's happening the next day, and while the kids read a book and just does her thing. So sort of it's not exactly taking up any time that I wouldn't be wasting. I'm actually spending time doing something that's beneficial for our future instead of sitting down watching TV.
You mentioned your kids. How old are they, by the way?
2 and 5.
I mean, can you see yourself? I mean, by the time they grow up, say in their teens, you would have probably had 10, almost a decade of experience. So could you see yourself, become of course far better than you are today, and then potentially, passing on what into them by the time they're in their teens?
Oh, absolutely. That is probably why I started this whole thing. So obviously they can grow up and tread their own path, but when they're 18, I'd like them to know everything I know, and they start up their own brokerage account and they can start trading with confidence straight away. Don't have the setbacks and don't have to wait till they're 35 like I was before they actually get started in the market. They'll have a 15, 20 year head start on me, and then by the time they're 60, they'll have a fair sized portfolio, and set themselves up if they do it all right.
I don't think if they start in their teens, I don't think it will take to 60. I reckon by the time they're in their mid-20s and by the time they're your age, they'll be multi-millionaires. I can tell you that. That's going to be their journey. As long as they start the right path and they do listen to what you're saying, they will get there much quicker.
And if they go straight between my risk profile and their mothers, they'll probably get old, I'd reckon. Their mother likes to throw it all on black.
Right. So are you saying that Tess is a far more less risk-averse person than yourself?
Absolutely.
Right.
Yeah.
Okay. And does she get involved, by the way?
No, not really at all. She's just left it to me, and not interested in it. She checks in with me every week to see how I'm going, and great cheerleader. Gives me plenty of confidence to keep going for it, and
it's actually probably a good thing since she's a far more riskier person. You having the safe hands in the family.
Yeah, definitely. They'd all be on. It would have been all on Alibaba a week ago. Otherwise, I'd say.
So being a business owner as well, how would you say that? Actually, the question is, how would you say investing and trading that you've learned so far has now changed your mindset towards you running your business as well?
So how we run our business, I suppose it's just given us a bit more diversification because we own a couple of houses and that sort of thing as well. So it's just given us another venue to put a place to put our spare money. It's we're not even risking, not borrowing money to do this or anything, and it's better than it sitting in a bank account. So I think anyone out there knows that when it sits in your bank account, you tend to spend it. So, and it's just given us that diversification because the cattle markets, they go up, they go down. That surgery is busy or it's quiet, and and with housing and now shares. Ideally, by the time we retire, and hopefully we can retire whenever we want, it's not just a number. We've got that risk split between everything, and it's just given us another option for where any money we make, we can put it. It's given us that extra feeling of security in our business, and
Yeah, cool. And I didn't. This just came out about while you were answering the question. Do you your superannuation, are you running a self-managed super, or is it just within, say, an industry super fund or something?
Just within an industry super fund. Both Tess and I were all with.
I mean, this just out of thought down a track. If you were, I guess, once you get comfortable and you know what you're doing, and you're very comfortable what you're doing, potentially, which is what a lot of our members do, maybe have a think about that, maybe potentially running your own super fund down a track. And once you get to a certain size, you go, yep, I'm obviously size of the super, at least 200,000+. And then if you've got that, and the other thing is, if you're comfortable knowing what you're doing here, then potentially slowly transition across there, because then that way you've got full control of what you're doing going forward.
And that's definitely a goal of mine in the future too. Again, to have control of my own money rather than putting it in someone else's hands. And I could probably.
I always say that no one in the end will care more about your money than yourself. You are the ones that will will be the one that takes care of it the best that you possibly can, as long as you know what you're doing. Though that's the main thing.
Yeah, absolutely.
So if you were, let's say, if you were to start all over again, today, what would the first thing that you'd be doing? Like, is there any potential, one or two takeaway lessons that you could, share with our fellow members that's on the line at the moment?
If I was to start all over again, I would have started 15 years earlier. I wish you'd come into my life 15 years ago, but that definitely can't change. But it'd be only just follow the rules, stick to the rules. Anytime that I've ventured away from the rules, where I suffered a bit of FOMO or something, it definitely hasn't turned out. If I had just waited for those technical indicators to be right and waited another week, and a lot of my smaller results were from in the high market risk. I was selling out as soon as they made a profit. I'd just sell them because I'd just be worried about a market crash. So I thought, I made a 7% profit, I'll just sell it, and the 7%, that's a win. And to look back and So, a lot of them went on to make 20 or 21% if I had just followed the rules. So that would probably be the biggest thing. So, not buying anything on FOMO, because you tend to wake up in the middle of the night and just see what it's doing, because back of your mind you're thinking you didn't follow the rules, so you're taking a gamble. When you're a bit risk averse like me, it's you don't sleep as well when you go with a bit of FOMO. And also just to go back through and watch all the inner circle playbacks. There's just so much information in them, and now I've built a spreadsheet that I can. It's basically I put all the valuations in it, and it's and I built it, and then after putting all the numbers in manually, I went back and watched an inner circle thing where Trisha Butler put in. You can automatically download the information from Guru Focus, and it just automatically goes into the spreadsheet, and that would have saved hours of my life. So I'd probably only be spending half an hour a week instead of 7 hours a week if I had just seen that one inner circle video once. So there's just so much information and so many. Wouldn't like to call them shortcuts, but they would make your life a lot easier when you see them. Yeah.
I mean, Trish is on the line, so she's hearing what you're saying right now, so she's probably smiling.
Thank you very much, Trisha. I wish I'd had good internet that week and I'd watched that inner circle meeting.
Yeah, I mean, and this is for everybody as well. Like, obviously, we have our inner circle, meetings like this, and we record them. But at the same time, I always make the point that I break things into topics. Like, for example, today we covered over the investing side plus Alibaba, and then I do that on purpose because then I can split the video up, and rather than watching the entire thing, you can just go down a track, just go through the certain topics, and there is a tab inside Inner Circle which says, secret skill development, and every single topic and module is broken there, and you can always, in alphabetical order, and you just go to have a read or have a look at what topics you want to, you're not unsure of or not sure of, and even do a search, and literally it should point you to that direction, literally, and that's what John is talking about. So yeah, thanks John for letting me know. That's awesome. So I probably wouldn't already know your answer, but I would ask it anyway. So would you recommend Blueprint and Inner Circle to others as well?
No, stay away from it. Run a mile. No, it's obviously it's brilliant. I love it. It's like I said, it's given me something else to do with my spare time. That's setting up future not only for myself, but something that I can just pass on to my kids if they want to, and they'll, they can then start building their financial freedom and wealth a bit sooner. Hopefully, it's the main reason I've done it, but also to set up our own. But yeah, it's then big thing is too. If I hadn't done this course, and you with all your watch lists and what you're actually currently investing in, that's what I go off to build my own watch list. So I've got something to go off. You do all the research, and we can go then research ourselves, and when we find those stocks that we've found, and then it pops up on your watch list the next week, and just give me that. Oh, I'm on the right track if Terry's looking at this one too. Yeah.
Yeah, and that's what that's what these lists were originally for, because I did that for that particular reason, and then I realized, out of the blue, then I realized that it wasn't just the giving you that opportunity, but it was giving you confidence, because, like you said, you'd go off, do your own research. And the biggest thing is, if you do your own research, you find the stock, then you see it pop up on my list right away. You just know that you're on the right track. And this was my experience when I going back in time when I invested for a big time fund manager. I was managing part of their account, and many times that when I'd find something, and then I'd actually had to let them know what I was about to buy, and even though they couldn't tell me, that they would call. They would literally say that I couldn't touch it at this point in time because the stock was like what they call in play. So they were running, just the size of their fund, they were running about $10 billion. It's a super fund, and I manage his private portfolio. But because as a fund manager, which is what I don't like, why I didn't like going to funds management as well, is because they had to look up, just for conflict of interest, their fund had to basically buy the stock for them for that fund first before their own portfolio. So even though I was managing their portfolio, they did not give me a watch list like I'm giving you now. But whenever I found something and I tell them that I want to buy it now, and this is the price I'm going to pay, and I'm going to start buying from today to next week, because it was quite sizable, they would stop me and say that it's currently in play, which means that they're now buying it as well. So it gave me the same thing, as in it wasn't a watch list, but I just knew that, oh great, I found not that I was happy, because I actually did want to buy the stock for them to perform for them, but I couldn't touch it because they found it at the same time as me, but they needed to buy it for their super fund as well, and they needed to get that done first. Usually $50 to $100 million worth before I could touch it. But then by the time I touch it, what does that mean? By the time they buy $100 million worth, that stock price would have gone up by a mile, and then I couldn't touch it anyway. So it was that experience that I got that I realized, it's all about just giving people confidence that if I was just to share with you what I'm about to buy, and not necessarily that you need to copy it, but if you were to find it, it actually gives you much more, straight a massive confidence boost that, wow, I'm actually literally doing the same research as Terry, and I found it just like Terry, and then that's it.
Yeah, definitely, and probably an even bigger confidence boost is when I buy one and then I look back and see you bought it in the same week or at the same time. Yeah, I'm looking the same stock, and usually because it's come off your watch list, but to see when you bought it, I bought it, and now all that stuff just gives you confidence. So.
Yeah, that's cool, very cool. Yeah, so John, what I might do is I might pass it on to the who's online at the moment, and whether there's, they might have some questions. So do you mind just staying on the line, John, to see if there's any questions, and I'll let you answer it, directly from your mouth as well.
Yeah, definitely not a problem at all.
So guys, any questions for John in particular that you wanted to ask him? So just look, while I'm waiting for the questions, just put a Q in front, and then I'll ask it, and then John will, he can't see the question, but I'll ask it, and then John can answer it. So there's just a lot of thank yous, and there's even, Sam just said, gee, John is a great looking dude. That's from Sam. So give him $20 after this, John. Okay, Richard's just got, John, thanks for sharing. Hope beef price is still good. Let me see. Oh, Aranka, yep, I'll repeat the expense later. So any particular, nice to see Activision in there, John, gaming stocks all the way from Jerry and Tully. Okay, any questions in particular that you want to ask John? If not, then we will let John go. Irene's just put a comment, John. Time to put his farmers deposits into IB. So that's a tip. Don't leave it in your farm deposits.
Agree, Irene. I'll talk to the other directors and see how I go negotiate.
Actually, just share with them your spreadsheet. They'll go, what the hell? So 43 days to get 6.5%. That's not bad. We're only getting 0.6 for an entire year. Okay, just a lot of thank yous, John. So doesn't look like there's any questions coming through. Thanks, John. Now, that's good to see someone starting small and looking, starting small and actually making the most out of it. And encouraging to hear John's story. Awesome. Yeah, just a lot of thank yous and encouragement that you've inspired them, which is that's really, really cool.
Just hopefully I inspired someone, didn't turn too many away. So it's great to be here, great to be part of it.
No, highly unlikely.
Thank you again, Terry, for everything you've done. Appreciate it.
No worries. Highly unlikely. Yeah, thanks, John, for being here, and definitely thank you for making the time to come into the Big Smoke to get the internet working on time.
I'll enjoy my coffee tomorrow from that Monopoly coffee shop.
Oh yeah, definitely. Yeah, just make sure they don't increase the prices. All right, thanks, John.
Thank you.
Bye.